Hey folks, Dan Frio here with your market update for October 15th, 2024. So I am back. I missed a few days. I went to go back to visit my brother-in-law. He was diagnosed with cancer, and I went back to visit with him for a few days just to make sure he's doing okay. So let's get over to the real reason why you're here, right through here. So mortgage rates, since I left last week, they're up and up and up. And the question I get every day is, Dan, the Federal Reserve cut rates, and since then, mortgage rates are up 0.5%. So the Federal Reserve cut rates 0.5%, and since then, the mortgage rates are up 0.5%. What in the world is going on? And that's what I've been working on for you over the last few days. So I think I found it. A lot of people, well, here's what's happening is there's uncertainties in our country, throughout the world. I just sitting here, just meandering around, just writing down some things. I'm like, okay, what causes me some anxiety when I think of our economy, our country, and the world? Here, I just wrote down a couple things. The election's scaring the bejesus out of me right now. Okay, so that's one thing. The Middle East, what's going to happen? Is Israel going to retaliate? And then that's what we're waiting on at this point. And then if they are they going to hit the oil fields? Okay, so that's another piece of the puzzle. Is there going to be a recession? Don't know if you remember, but last year, 84% of CEOs expected a recession in 2023. Didn't happen. And now there's going to be a recession in 2024. The inverted yield curve. Everybody keeps saying, well, it inverted, that means a recession. Now it uninverted, that means a recession. So that's also causing anxiety. What's the Federal Reserve going to do? Are they going to cut? They're going to pause? The last reading, it was the number or the percentage odds that they weren't going to cut started going up right before I left. So where's that today? And then one good piece of the equation, we have the China stimulus that might help the economy do some things and might help the world on a few things. But let's figure out what exactly is going on. So what I wanted to do is show you guys what's going on in the economic calendar. And there's really nothing today. We have the manufacturing index. Last reading was 11.5, positive 11.5. And this time we have a negative 11.9. So a 23% drop, or 23-point drop in the manufacturing index. That's not good news, folks, especially from a country who used to be basically manufacturing oriented. So now my concern went from, okay, I was at a wedding a few weeks ago, and this plays a role into this conversation. And I was sitting with two people. One was with old Silicon Valley Bank. I don't know what they're called now. And then one was an analyst. I think it was with one of the big firms like Goldman Sachs or something like that. And they were both talking about how much money is on the sidelines. And I'm like, there's how much money is on the sidelines? And the one guy said, there's trillions. And I'm like, there can't be trillions on the sideline. The markets are killing it. Bond markets are doing good. Money market accounts have good yields and everything else. He said, no, there's a lot of money sitting on the sidelines. And then I did some research, and just since the Federal Reserve cut rates on September 18th, over $180 billion has moved out of the markets into money market accounts because they're yielding about 4.5% right now. And people are like, okay, I don't know what's going to go on with all that list I just went through, the election, oil, Middle East. People don't know what's going to go on. So now they're like, okay, I need to put my money into a safe haven. Okay, those right now are money market accounts. People used to put money in bonds and other areas. Now they're like, we're just putting it in money market accounts. Okay, so I have Tommy Lee here. He's an analyst on Wall Street. I follow him quite a bit, and his calls in the last year or two have been impeccable. And I'll keep following him until he's not on fire. But he brought a lot of this to the forefront. And I want you guys to listen to this and understand where he's saying the markets right now are in a good position. But we have a lot of cash on the sideline just waiting to see how all this plays out. So let's get over to this video. It's pretty intriguing. Then when we come back, I'm going to show you their bank earnings just started coming out. And they're actually doing, well, I'll show you that here in a second. And then the CME FedWatch tool, what's it telling us? Because before I left, there was about a 20-25% chance the Federal Reserve was not going to do anything with interest rates. So let's get to Tommy Lee, and then we'll be back to figure out what in the heck's going to go on with the markets as well as interest rates. So take it away, Tommy.
Let's get to the markets following last week's inflation data. Tom Lee's here, managing partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. Tom, in recent appearances, I would say that your conviction hasn't necessarily been quite as strong as it had been in some of your other calls, where there's been a time where you said the inflation data will be so good that the S&P will be up 200 points in the next week, and it panned out, and it played right into what you were saying. The last time you were on, I think your basic thesis was that market's still solid through the end of the year, but in the meantime, there could be some volatility and maybe even a pullback. Now I think you're saying it's been more stable than what you're expecting, and it has to do with liquidity and cash on the sidelines more than anything else.
Yes, that's right. You're right. We've kind of been sort of, I think, fooled by seasonality because we thought markets would be hesitant before, the elections, and it's October. But we've seen this market be incredibly resilient. So I've underestimated how strong this market's been. I think it really shows macro data is becoming less important, and it's now the fact that a lot of cash has been on the sidelines. For the last 2 years, investors expected a recession, or many thought when the curve uninverts, we got a recession. But at the end of the day, there's $6 trillion of cash on the sidelines, and October has turned out to be a great month.
There's that number I was talking about. He said there's $6 trillion on the sidelines. That confirms basically what the other two people that I was sitting with at the wedding basically was telling me. And I'm like, there's that much cash on the sidelines. Impeccable. Where's it going to go? Let's see if he's got any insight.
We've seen it, evidence of what you're saying, and I know how closely you watch it. We've seen it on a daily basis over the last, I'd say, maybe month or so, where many days we're even down triple digits in the futures, only to end up 250 or 300 points by the end of the session. And with no backdrop of positive news, nothing to account for it, other than it seems like there's money on the sidelines that's coming in.
I mean, it feels like investors are underinvested in stocks. I think there's people who've dreaded 2024, thinking this is the year we slip into a recession, and instead, and we're seeing it with earnings, companies have been really resilient.
Yeah, we waited and waited and waited to retest the lows a couple of times in 2022 and 2023, and people weren't bullish at all. We didn't get great advances, and now it's almost unstoppable. And nothing seems to be able to knock it off track. Whether it's, I think the PPI and CPI were both a little hotter than people thought. The prospects for a Fed continued easing cycle are now open to some conjecture, I think. Although most people say it's still going to happen, even though things are pretty solid in both the economy and the stock market.
Yeah, I think it makes sense for the Fed to be dovish, just because inflation is still tracking, especially PCE, towards their 2% target. And now we have some concerns about the job market. So I think the Fed has to be supportive. And I think this election, which is becoming less of a coin toss, I think because it's been a coin toss, people have been sitting on their hands. I think these are reasons markets are starting to have conviction, even in front of an election event.
I think we've soft pedaled it too. The swing states have even some of the swing states that looked like solidly in Harris's camp are now truly swing states where Trump's up, in Michigan and Wisconsin, and betting and everything else. And if NBC goes from Trump up, or from Harris up 5 to Trump and Harris tied, and then you do a full field and Trump is actually up in a full field thing. So I think you might be right. Bitcoin's at 65,000. You wouldn't say that the stock market's performing better because it's starting to look like it's less of a coin toss, would you?
I think markets like visibility. So if it looks like one candidate is now looking like to be the surprise winner, then markets can actually trade better.
Okay, we'll leave it at that. He just concludes basically that way. He's just saying, if the markets know what's going to go on, and they can trade accordingly, and basically normal patterns, I guess is the best way to put that. So, okay, so here's what I wanted to show you. Here's the news in the stock market right now. Let's see how the Dows and everything else is doing. And there's red across the board. But let's see. Here's what's happening right now. We got bank earnings just started. So Goldman Sachs just came out. They beat profits, stocks trading, and they just beat earnings. We have Boeing. Let's scroll there. They're in a world of hurt there. Bank of America tops estimates on better than expected trading revenues. U.S. crude oil prices dropped 5%. Middle East, a little bit of calmness there. Citigroup earnings top estimates. So we just have 1, 2, 3 earnings from banks that came in fantastic, and we got oil coming down. That's nothing but good news for the overall markets right now. So let's get to the CME FedWatch tool. What's it telling us? Well, there's now a 90% chance the Federal Reserve is going to cut rates by a quarter. How do I know that? Well, we go to the CME FedWatch tool. It's right through here. If you're new to the channel, just check it out. You can just look, just Google CME FedWatch tool. This tells us that in 23 days, what the Federal Reserve, what they're expected to do. So right there here, it tells us what the Federal Reserve's, what they're expected to do at the next meeting. And it says right through here, there's a 90% chance at the November meeting, the federal funds rate will be 4.5 to 4.75. Right now, it's 4.75 to 5%. So that's last week before I left. This was it was up to double-digit numbers on the expectations that there might not be any rate cuts. Okay, so then let's go over to here. Here's some validation. I said, okay, so I saw an article or something saying there's a whole bunch of money that moved into money market accounts since the Federal Reserve cut rates. What was that number? And it says right through here, 180 billion had shifted into money market funds since the September 18th meeting. That's a lot of cash just sitting on the sidelines. Money market accounts, the reason why people are doing this right now, look it up. The average money market account right now is 4.5%. 4.5% with no risk at all. None at all. Well, good stock market on an average year, if you're up 6 to 8%, that's a fantastic return. So if you can get 4, maybe 5% on money market accounts right now, in a safe haven, probably not a bad choice for a lot of people to do that. So the next thing is, let's go over to our portfolio. So remember about a month or two ago, we created this portfolio because so many people down below were saying, Dan, I have no money. I'm broke. I don't have any. Well, I want to change your mind. I want to change your thoughts. Instead of always thinking broke, let's get you out of that cycle. Okay, so I don't care how much money you're making. Okay, you need to make a point that if you make it $1, $5, $10, we got to start putting some money aside, just even if you use it for educational purposes. Okay, so what I did is I went to Yahoo Finance and I created a little mock portfolio. And we're going to add to these over time. We might retract from them. I did a China trade. I don't know if you remember, but a couple weeks ago, I went in and bought into the China market. They have a kind of like our S&P 500 right down through here. This is our top 500 companies. Well, China has a similar thing. So I bought into that when the China stimulus package got passed. China just released, it was billions and trillions and gazillions of money in stimulus packages. And so I'm like, okay, this is going to be good for their stock market. So I jumped in. We made a quick, I think 10 or 15% return, sold that because it was just a trade. What I want you guys to understand is how to invest for the long run. So here's analyzing people's finances. I've been doing the mortgages for 35 years. We do a lot of high-end borrowers, and we have to know their finances. Well, a lot of times, I'm looking through their finances and I see their equity positions. And I see one common denominator with a lot of wealthy people. They don't buy individual stocks. They buy what's called ETFs. It's a basket of stocks. Okay, so for example, if you look through here, this one right through here, it's the foodie. What is the foodie? Well, it's a basket of utility stocks. You can see it right through there. It says utility index. So if you think the utility market's going to do well right now, and it usually does in this cycle of our economy, it has good yields and it has stability. Okay, it might be a good thing to get into a utility fund. You might like financials, like all the stocks that we reported earlier today. Three individual banks or financial institutions we went over today, and they both blew out earnings. Think it's going to continue? Maybe look at the XLF, which is a basket of financial stocks, okay? And then down through here, this is Berkshire Hathaway. If you ever heard of Warren Buffett, he's the mastermind of investments and you want to follow his, just buy into his company. You can buy a share of his stock and own all the companies he owns, you can own. BITX, this is Bitcoin times 2. You can see 2x Bitcoin. So it mocks what Bitcoin's doing. So if Bitcoin's up, it's going up 2x. That's fantastic news sometimes, If it's going down, it goes down twice as fast. So we don't like that many times. And then the SPDR, SPY, it is the 500 biggest companies in the US. And that's in this, you buy this one piece of this ETF, and you're buying all those companies. Here's what these returns have been doing over time. The SPDR is down a little bit today, but here's our year-to-date, or basically our earnings so far, and we've been into these positions for about, I'm going to say about 2 months. So we're up 2%, 3%, 3%, 20%, and I think that's 6%. Don't have my glasses on, but we're doing pretty good over a short spell of time. So now why are you here? You're here for this. What's the bond market doing when it comes to mortgage bonds? Well, the bond market's like in the news today. Over the last few days, especially the days I was gone, the bond market moved in the wrong direction and mortgage rates were going up. Today, we're going to see mortgage rates come down. How do I know? Well, the MBS market right through here. This is a mortgage bond that trades on Wall Street. Okay, this is how you follow rates. You don't follow the 10-year Treasury. You don't follow the federal funds rate. You follow the MBS market. So what this tells us is what's going on with the price of the bond. You can see that right through here. So if the price of the bond's going up, which you see right through here, that means rates are coming down. There's a yin-yang effect. So prices up on a bond, yields down. If the price is down, yields up. So right now with the bond market up 12 ticks, you're going to see mortgage rates ease just a little bit right through here. And let's refresh it. I don't think it's refreshed yet today so far, but yes, it did. So we were down 2 ticks so far today at the closing bell. I'll let you guys know how all this mess ended for the day. But right now, like I said, we are up 12 ticks. The equity markets right now, let's see if we can see what they're doing. We'll do a quick refresh of this. We got the Dow Jones down 100. We got the S&P down 22, NASDAQ down 150, Russell 2K up. We have the VIX up to 20. Don't like that. That's telling us the anxiety on Wall Street's up a little bit. But let's see how that pans out for the rest of the day. So thanks for watching, folks. If you haven't subscribed just yet, please do so right over there so you get my report every day. Here's the best way to do this. Start your day by watching my report. You're going to get the stock market. You're going to get the bond market. You're also going to see what the heck's going on with cryptocurrencies. Let's see what's going on with cryptocurrencies right now. It's up $426 to $66,000 a coin. So if you're invested in any of these, you might be making some money today. If you're in the overall markets, you might be down just a tad. So thanks for watching, folks. Can't wait to see you back here at the closing bell to see how this mess ended for the day.